Good morning. This is Dawn Clevisol with Stress-Free Bookkeeping TV. This is episode 12, Show Me the Money. There are two ways that are really important for you to use inside of QuickBooks to show yourself the money every month. One of them is invoices and the other one is sales receipts. So we're going to be talking about that today, but I hear it all the time. So often I hear from business owners and they are frustrated about trying to figure out their bookkeeping. They're having a hard time figuring out the accounting software. They were told it was so easy to use, and yet it's not easy for them. Very, very common. QuickBooks Zero, they're really good at telling you it's beautiful, it's easy. Yes, it can be, but is it completely accurate if you don't have any idea what you're doing starting out? No, it's not. So I try to do tutorials like this just to keep you guys up to date and also let you know that it's common to not know what you're doing. So just wanted to go over that with you today. I do have an ebook that I've come out with that shows you the 5 things that are really easy you should do every month. The first one is Show Me the Money, which is your sales and your invoice receipt. So I did want to go over that just real quickly with you guys this morning in case you were frustrated and having a little bit of trouble with those items today. The reason that you would want to use a sales receipt rather than an invoice inside of your accounting system is if you have exchanged money with somebody and it's just like a one-time transaction. It doesn't have to be the only time that you work with them, but it's a situation where they paid you, you just need to record it in your books. So let's start there. I'm going to show you about that. So here's a sample file inside of my QuickBooks account. And so if I go up to this little plus sign here, I can go over to my customer list and I can create a sales receipt right here. So once you do that, it will open up. You can type your customer's information in here, their name, their email address. And then the most important thing on this form, aside from adding your products and services, is going to be that the deposit to account should be what's called an undeposited funds account. So if you're not familiar with accounting, what that means is you're basically putting the money into an envelope mentally inside of the accounting software at this point. So you're not depositing it directly into the bank account register. You're not posting it into your register. You're just going to record it into this envelope called undeposited funds. And what that allows you to do, it allows you to take more than one check to the bank or more than one cash deposit to the bank at a time, because as you probably know, it's very rare that we only deposit one of the checks. Like we don't say, okay, deposit this check. Okay, now deposit this check. Okay, now deposit this check. Because it could take the teller all day just to handle that one transaction from you. But if you were to put your bank account name here instead of using this undeposited funds account, hopefully it's not too small for you, but it does say undeposited funds right there. If it said bank account, then what it would do, it would put an individual transaction into the bank register every time you recorded a sales receipt. Well, that's not going to be accurate because it's not going to match up with your bank statement. So this one step, especially as your first step for the month to record your sales information, is going to save you so much time later on, because when it does come to you reconciling your accounts, you're going to be able to match these items up so much quicker because you're using this envelope account, undeposited funds. That's going to be a holding account essentially for you. So you just go ahead and you fill your customer name in there, the date of the receipt, payment method. If it's a credit card, I like to put the last 4 digits there. That's another way that makes it easier for you to match it up to what happened at the bank. And then you would put your product or service that you have. In this case, it's a construction company. So if it was concrete, design, gardening, excuse me, you would go ahead and enter that, and then you would save it. Then I want to show you, they probably have some. So what happens is when you go to do the bank deposit, all I did was go back to that plus sign. It opens up this area here. And then, oh, look, there are the other invoices that I created. Oh, I did deposit just this amount, or no, I didn't. I actually deposited these two together, and oh, that matches my deposit slip. So if you are the type of person who is advanced as far as I don't know if I should call it advanced or not, but the kind of person who's super organized. And so you actually sit down in front of your computer with your bank slip before you go to the bank. You can actually fill that out as you're checking this off. Or if you're like most people, they would actually do that once they got back from the bank. So either way, you just want it to match whatever happened at the bank. And in this case, the account up here is going to be the account that you deposited to. So if it's your checking account, if it's your savings account, this is where that happens. And then you're telling the system, okay, go ahead and add this to the register for this account. Now there is one circumstance where you've received money from somebody where you wouldn't want it directly and you wouldn't want to use just a sales receipt. And that is if you have somebody who has paid you in two different formats. So if they paid you cash and check, or if they paid you check and credit card payment, any combination of payments, with the sales receipt, you really can't record those transactions separately because it's only gonna do that one transaction. So what you would do is you would use an invoice. So you go up to the plus sign again, go over to invoice. You would create the invoice for them, but what that lets you do, let's see who they have in here. Nobody that begins with, okay, so we'll do an invoice for Amy's Bird Sanctuary. We'll do concrete. Let's just say it was $50. So say that she paid us in two different ways. So what we can do is save this invoice, then go up to receive payment. So the thing that the sales receipt does for you that's really wonderful is it saves you a step. Could you invoice everybody? Of course you could. You could, maybe Amy paid in full $54. So we could invoice her, then receive payment, then deposit it to the bank account using the make deposits window. But if we receive payment in full, we might as well just do the sales receipt, which directly puts it into the undeposited funds. Essentially, you're skipping the need to have to receive the payment. You just skip a step. So in this situation where they have paid you in full, that's really the easiest way to do it. In this situation here where she paid us in full, but she paid us two different ways, we're going to go up and you can receive payment on the invoice. So that's the nice thing about the invoice is it gives you the ability, you could pay this, if she paid $1 a day for 54 days, you could record all of that. So you would come in here, choose the payment date, choose your payment method, and then here's where you would do your deposit to account again, where it's the undeposited funds account. So it's just really important to always be depositing to undeposited funds. Again, that just makes it easier when you go to do your deposit. So in this case, we're going to have $24. Oh, we don't want it. Oh, she had announced. So what's happening here is she had a previous invoice, but we want to apply it to this invoice. So I went ahead and I switched it. QuickBooks will try to help you out. It's going to want to do this invoice first just because it's older. So they're assuming, okay, well, she's paying $24. You want it to go to the bill that she owed previous to this one that's currently open with today's date. And once you do that, so we'll do save and close. We'll go back up to the plus sign, go into bank deposit. Now here's Amy's payment for just the $24. And that allows us to deposit the $24 to the bank account. But what happens if she paid both and we want to record that other payment? So we can go back up here. And then there's an option here that's called receive payment. And we can put in Amy's Bird Sanctuary. And then say for this one, she paid with a credit card. Wants to know which one. Lisa. So she paid with a credit card. Maybe it was this number. And then it's the $30. Now, the funny thing here about QuickBooks is now that this matches exactly what the open balance is on the invoice that we're actually trying to pay, in this case, it chose the one that matched rather than the one that had the closest date. So if I've had put in any other total, it would have tried to do it here, and I'll show you that. So if I had put in $24, it's trying to pay the oldest soonest. So you just kind of have to watch, make sure that whatever you're intending to do inside of your QuickBooks account is actually what's represented here. Because you could see if it was another partial payment, it could get a little bit confusing if it got applied to the wrong account. So say we did want to pay only the 24, we still want to make sure that we're applying it to the correct invoice. But in this case, I'm going to pay the 30 just to clear that out. And again, this was a Visa. And then I'm going to save and close. I'm going to go back up to the Make Deposits window. So now you can see here that I have these two items in the Make Deposit windows, which is, again, it's just like a holding envelope. It's waiting for you to tell the system, okay, how did this actually get applied? How did these payments actually happen? And so many of you may know that some credit card processing companies, sometimes they'll deposit the direct amount. So in this case, we've got the $30 Visa payment. But sometimes they'll take their fees out. So say if you're using Stripe or something, often Stripe will take their fees. So you want to come down here and you would type, no, he doesn't use Stripe. We'll just type Stripe anyway. Then we usually have to add it. So I want to add Stripe. It's going to ask me, it's a vendor, so I want to change this to vendor. It's defaulting here to customer because you're receiving money from somebody. But what I'm going to do is put the merchant account. I'll just put bank fees because they have that one. And then say it was minus $250. So now this total here, when you're in the Make Deposits window, should match how it was deposited at the bank. So what I'll often do is, the Visa ones or the credit card ones are going to sit here for a few days. If you've done a bank deposit, you can go ahead and, do the bank deposit the same day. But for the Visa and the MasterCard ones, you kind of want to wait until they get processed because you want to make sure that you're not missing any fees. Because if I was to deposit this as $30 into the checking account, it's not going to match up when it comes time to review it. So you want to make sure that that doesn't happen. And so in this case, like I said, you got your charges here. Now, if I were to go in, oh, there it is. There's the $27.50 that I meant to deposit. So I think that's it for today, but make sure that you're using those sales receipts when you're collecting money directly. Use an invoice. Actually, let me just show you the invoice. We use an invoice to record that one payment from Amy's, but I just want to make sure that we didn't miss anything. So if you have customers that you bill regularly, you can actually create this invoice and then come down here and make it recurring invoice. So I do this with a lot of my clients. They get billed on the first, and if they're a credit card, that gets processed right away. So the recurring invoices make it so much easier. Excuse me. So here's what the recurring invoice form looks like. And so it's a template, which means it's going to stay non-posting unless you schedule it to post. So you create the template name. So you would use your client's name or whatever made more sense for you. And then you would either schedule it if you want QuickBooks to put it into the accounting system for you, or you could do a reminder. If you maybe have some charges that might change from month to month, you can just remind yourself. And you can also do unscheduled. And so the reminder and the unscheduled allow you to just go in and manipulate the invoice. If you schedule it, it will post it for you, which is nice because then when it's time to go in and pay it, you're able to go in and just apply the payments. You don't have to recreate the invoice every single time. So I just wanted to make sure you saw that. And I think that's pretty much the only difference really between the sales receipt and the invoice is that the sales receipt has that deposit to account on it, and your invoicing, you won't see that until you're making your payments. So do I want to exit without saving? Yes, I do. All right, well, hopefully that's helpful to you. If it was, or if you have any questions, please comment below. I'll answer there. And if you want to get into a deeper discussion, you can always pop into the Stress-Free Bookkeeping social group. I think it's listed under Social Club, sorry. So it's Stress-Free Bookkeeping Social Club on Facebook. It's a place for you to quickly get an answer to a question that might be holding you back from getting your work done. So pop in there when you get a chance, and you have a great day. Thank you.